Hello everybody, it's the 16th of June. I'm Joe Neighbour from Signal Centre. Hope everybody's doing great and looking forward to the weekend. So just myself today, Steve's away on holiday, and next week I will be out of office also, so there will be no Talking Ball streams next week, unfortunately, but we'll be back pretty soon after that. So today, as always, if anybody's got any requests on markets that they want to take a look at ahead of the weekend, please feel free to post them up. It does feel in some markets at the moment that we're in the kind of summer doldrums, so we are seeing a lot of sideways and choppy price action. But prior to getting onto the charts, I'm going to run through the latest headlines, and we're going to go through those and see what's been moving markets over the past 24 hours. Starting off with the ECB. So we had the press conference and the rate decision yesterday, and as expected, rates were hiked by 25 basis points, taking the overall rate to 4%, which was in line with the consensus forecast and puts rates in the Eurozone at a 22-year high. There remained hawkish rhetoric from the ECB. According to the bank president, Christine Lagarde, indicators of underlying price pressures remain strong, although some show tentative signs of softening. She added that the longer term inflation expectations need monitoring and that recent wage deals added to upside inflation risk. Lagarde also stated that further interest rate increases were needed, with another hike in July. Subsequent sources report that the ECB suggested that a further rate hike in September was also possible. In terms of what's happening in the US, we had retail sales out there yesterday, and they increased 0.3% for May after a 0.4% increase in the previous month and a stronger than consensus forecast of a marginal decline. Underlying sales increased 0.1% for the month, which met market expectations, while the control group recorded a 0.2% increase on the month, and initial jobless claims were unchanged at 262,000 in the latest week and above consensus forecast of 250,000. We saw mixed US survey evidence. The New York Empire Manufacturing Index recovered very sharply to 6.6 for June from 31.8 previously and well above the consensus forecast of -16. There was a slight employment decline for the month, while there was a notable easing of pricing pressures on the month also. US yields declined yesterday as euro gained as a result of the ECB rhetoric. US yields moved lower on the day, with the 10-year yield retreating to around 3.72%, and the euro posted gains pretty much across the board after the ECB press conference. Risk appetite strengthened also during the session, with further optimism that China would sanction a substantial stimulus to underpin the economy. Equities also posted gains, with commodity currencies moving higher as well. Overnight, we had the Bank of Japan. They made no changes to monetary policy following the latest policy decision, with yields remaining capped at 0.5%. Okay, so that's it for the headlines. Let's get into some charts. And as usual, we'll kick off with cryptocurrencies. So let me bring that up now. So this is the Bitcoin chart. Does look as though it's under pressure. Looks as though it completed a head and shoulders top back here on the break through the neckline in May. We then saw a subsequent retest of that neckline, a little bit of an overshoot, but then prices have continued to decline since. So on Thursday, Wednesday, we saw a pretty nasty bearish candle. Yesterday, we attempted to recover some of those losses that we posted, but only really taking out around half of the losses that we made in the previous session. Now, there is pretty significant support here. If we go all the way back to the left-hand side, we can see there was a previous low there, then a previous high, which was capped at those levels at 25,338. So we're hovering around that level for the time being. It may be that we consolidate around here for a period of time, potential for maybe a little bit of a rise in the short term, but overall it does feel as though the tone is now bearish with this, and we should be looking maybe for lower prices over the more medium to long term. But in the short term, there is a possibility for a bounce while we continue to hold around this 25,338 level. Ethereum's on the front foot today, but that has broken through some support here, as we can see at 1677. We closed below that on Wednesday and so far have failed to retake that despite a positive session yesterday and further positivity today. So again, looks as though we may have formed some sort of top formation here, and therefore any gains are likely to be limited, with the overall bias now being for more bearish price action. But in the short term, we may get some sort of corrective bounce. Of course, it is going to be largely dictated by what happens with the benchmark in the cryptocurrency industry, which of course is Bitcoin. Quick look at XRP, that's slightly lower today. Bit choppy on this, as we can see price action's pretty choppy over recent weeks. Big bearish candle on Wednesday. Yesterday, a bit of indecision, a doji candle posted, and today we're offering not a lot in terms of direction. So it may be that we see prices continue to drop towards this major support we have down here at 0.4233. Okay, moving on from cryptocurrencies, let's take a look at where should we go? Let's go commodities. Let's take a look here at what's happening. So going with gold to start with, really nice turnaround yesterday on gold as a result of weakness that we saw in the US dollar. So a bit of a false breakdown here, maybe a swing failure. So we saw prices attempt to challenge these lows that we posted on the 30th of May, where we had this support line drawn on at 1932. We went below that level yesterday, but then reversed sharply to form a bullish outside day candle, which could indicate a reversal in the short term, which is quite positive. As we can see here, though, for really about a month, we've seen prices very tight in this range here. And unable to really move anywhere substantially. So potentially a top pattern in place here. We do have some resistance above at 1969, and above that we have a high at 1983, which need to be overcome if we are to get excited about maybe a bigger reversal in gold. So for the time being, it looks as though we're going to continue to see price trade within this very tight range. If we can get above 1983, then that could trigger further gains to the upside, and maybe then go on to challenge these previous highs up at 2070. Scrolling back to the left, we can see that at the moment the dominant trend pretty much remains bullish, despite the fact that we do have some small concerns about this being a bit of a top pattern, and we did break the trend support line back here in mid-June or early June. So remains to be seen what happens there. We are challenging the reverse side of that broken trend line. Still a bit of work to do on gold, and again that's likely to be dictated by what happens with the dollar index in the short term. Looking at silver, again a nice reversal here, not quite as impressive as the one that we saw on gold, but we can see prices did move substantially lower in yesterday's session, but then reversed to close pretty much where they opened, which is encouraging, suggesting that the buyers are stepping in to try and drive prices higher. We have resistance at 24.49. That's highlighted here by this blue dashed line. If we can get above that, then we may see further upside gains towards these previous highs, but there is fairly substantial resistance level there that we need to overcome first. So a bit mixed on silver. Still waiting to see further signals there. Not expecting much change in oil, but we look at Brent, we can see overall it's trading within a bearish channel. In recent times, going back to early May, we can see prices have been really trapped within a very tight range between 71.43 to 78.04. We now have the downtrend channel kind of catching up with price. So we're going to have maybe a simultaneous retest of this resistance at 78.01 and the bearish channel. So if we can break through that level, then that may offer some hope for the bulls on oil, because we may see prices continue to move higher in a corrective fashion if we can break out of this bearish channel. Of course, the flip side is we have this major support here at 71.43, and if that fails to support price, then the likelihood is we will continue to see price move lower within this bearish channel. So really all eyes on this very tight range that we have here. A break to the upside may suggest a corrective move higher towards 89.26, a break lower and we can expect new lows in line with this bearish channel. Similar situation with crude. We can see the range here is quite tight. Again, prices potentially on the verge of breaking out through that horizontal resistance at 74.69 and the downtrend channel at the same time. A break through those levels and we'd be expecting to target a move towards 82.70 to 83.66. A break to the downside at 64.33, and we're likely to continue moving lower in line with the bearish channel. Natural gas, see what's happening there, potentially on the verge of breaking out of a wedge formation. We can see here prices have been bumbling along this low at 2.10. Prices continue to be held at that level. Any sort of rallies that we're seeing at the moment, we're not seeing new highs being made. So we are seeing a continuation of lower highs here. But if we can break out through this short-term downtrend, then that may trigger a bit of a corrective move on natural gas. And obviously it's been a very, very tough time for natural gas. The price on the chart is very, very ugly. We can see a huge top pattern formed here, big breakdown to the downside, and prices just slid lower for many, many months. So looks as though we may be in consolidation mode at the moment. If we can break above this short-term downtrend, then it may spark a bit of buying interest in natural gas. So keep an eye out for that. Okay, let's move on to currencies now. Let's take a look at the dollar index to start. So big move to the downside yesterday as a result of all of what happened with regards to the economic data. So the Euro news pretty much instrumental in this as well. Push rates higher, Euro moved to the upside. Dollar index moved lower. Big move to the downside here, breaking through support at 102.83 and now into support at 102.23. As we can see here, there's a horizontal line with some local support, holding that for the time being. But if that fails to hold, then the likelihood is we are going to see a move back down to these lows between 100.82 to 101.01. So that's a big level to watch. If that doesn't hold, then we do have other levels to consider on the downside. But of course, we will be making new relative lows. That will be the lowest price that we'd have seen on the US dollar dating back to April 22. So the next level below that is the nice round number of 100. And then below that, we have a 61.8% fib level at 99.17. So dollar under pressure, it would seem at the minute. And that would suggest that we are seeing a move to riskier assets. So we may see that when we go to look at the indices in a minute, that they have been moving swiftly higher as a result of this weakness in US dollar. So expecting to see the flip side now of what we've just looked at on dollar index with euro dollar. And we can see there's been a substantial move to the upside yesterday, helped in part by the ECB raising rates and maintaining hawkish tone. So big break to the upside following this wedge formation. We do have this bullish channel that was in place for a substantial period of time, and that may get retested at some point. So we'll have to wait and see if that provides any resistance. And of course, we've got these previous highs in here as well, between sort of 110.32 to 110.75. So in this kind of zone here, we would expect to find some resistance on euro US dollar, but at the moment it's on the front foot. It looks as though it's also gapped higher today in trading. Has it? No, sorry, that hasn't. That's just a bit of a doji candle we've got at the moment. So pushing higher, potentially going to face resistance in this zone here. So do weigh that up from a risk reward perspective. If you buy now, can you make enough money in here without risking too much? Alternatively, if you're looking for the flip side to maybe speculate on a sell trade, you want to be getting in as close to these levels as possible with a pretty tight stop, because if we start breaking to new highs, then that would indicate that this bull run is likely to continue. Let's take a look at cable. Broken through resistance now at 126.66. That has been preventing prices from moving higher for a significant period of time, dating all the way back here to May 22. So for an entire year or so, prices have been capped at that level, but now we've seen a break through it. So that would indicate a continuation higher in price. We did have a break of a trend line, but now maybe we can redraw that trend line because we do have the multiple touch points that are required. So we've got more than 3 touch points in there to indicate that maybe the trend is set to continue. Above this, we've got resistance at 129.81. So that may be a level to target in the short term. Any pullbacks towards 126.66, which was the previous resistance, should now act as support from a technical perspective. So buying pullbacks to that level, targeting a move to the next level above could be a decent strategy when it comes to sterling US dollar. Let's take a look at dollar yen. So despite the weakness that we've seen in the US dollar, we're seeing more weakness in the Japanese yen because this continues to make new highs. We're breaking to the upside of what looks to have been a bit of a consolidation pattern, maybe some sort of flag or pennant formation in here, has just broken to the upside. And that would suggest a continuation higher in price. So looking pretty strong here, despite the major reversal that we saw on an intraday basis yesterday. We are up by nearly 0.75% on this. So the next level on the upside is this 61.8% fib level at 142.49. So looking pretty good indeed. What else have we got? Let's take a look at some of these commodity currencies. So they continue to move higher very aggressively. We can see here prices look to be breaking down on Aussie versus US dollar, but the substantial move to the upside has been pretty much a straight line move. So that's kind of invalidated the bearish threat, really. And if we look back to the left-hand side, we can see there was an inverse head and shoulders that completed back here in November last year. And the neckline of that was tested and did a fantastic job at providing support on that particular market, which has triggered further gains. We did have resistance at 67.93, but yesterday, price action made very light work of that, smashed through it, and looks to be ready to continue moving higher. So again, from a technical perspective, now that we have a newly formed support, which was resistance, we would expect prices to be limited to that level on any pullbacks, and maybe look for higher prices to eventually retest these highs that we posted back in February early this year. Looking at New Zealand dollar versus US dollar, that continued to move higher as well. Still not as bullish maybe as Aussie versus US dollar. A few mixed signals in here, but we can still see that we are making a succession of lower highs. So we need to be mindful of that. There's resistance at 62.61, which may prevent prices from moving a little higher in the short term. But it has no doubt had a very strong move higher in recent days. Okay, I don't think there's any other requests on the FX market, so I'll leave it there just so we can whiz through a few additional markets. Let's move on to indices now and have a look at the Euro Stoxx 50 to start with. So a little bit muted here yesterday, despite the fact that we've seen the ECB raise rates and hawkish commentary. Because we've seen that big move down on the dollar index and a move higher in the euro, we would have expected really prices to maybe have moved a bit higher here, but they haven't. But as you can see from yesterday's candle, we closed well off of the worst levels of the session. So that's quite encouraging. No real follow through today on that though. Slightly down on the session. We are facing pretty stiff resistance above at 44.15. So we need to get above that level. And if we do, then I think it just really confirms that the market is continuing in its bullish phase. We're dating back to November 2021 here as to why this level's prevented prices moving higher, and that would take the index to new all-time highs. So clearly a bit of apprehension about trying to break through this level because we're moving into uncharted territory here with the Euro Stoxx 50. But a breakthrough that I think would indicate that we are in a bullish phase with these equity markets, and we can maybe start looking for higher prices over the medium to long term. Looking at DAX, similar situation here. We are facing massive resistance. So this is back to November 2021 as well. We're rallying into this level at the minute, which is at 16,300. Looking to try and break through this level. Decent reversal in yesterday's session. Again, this would take the German market to new all-time highs. So uncharted territory. Little bit of apprehension at the moment, but if we get a big break to the upside here, then that would confirm the bullish tone in the market and we can start looking for higher prices. Not so good on the FTSE 100. So that reached reached all-time highs in February this year before then collapsing pretty sharply, attempted to make a decent recovery, but didn't quite get back to those highs. And then prices have moved lower again. So yesterday was a pretty bullish session. So a lot of what happens here is dictated by the US dollar because a number of the constituents within the index, certainly the biggest ones, are made up of companies that generate most of their revenue in US dollars. You think about these big oil stocks, BP, Royal Dutch Shell, a number of the mining companies as well, of which there's many, and some of the global banks all generate revenue in US dollars. So they will be impacted by what happens with the US dollar, and that's keeping this market a little bit subdued at the moment. Although we did see a decent move to the upside yesterday. Short term, we've got resistance at 76.89 to contend with. If we can break above that, then maybe it would start opening up the way to an assault at those all-time highs again, but still plenty of work to be done. Okay, US markets. Let's take a look at the Dow to start with. So that had a decent breakthrough resistance yesterday, taking out this sort of short-term downtrend that was in place. Also trying to get through these previous swing highs from the 1st of May at 34,295. So very strong move higher yesterday, holding on to those gains in the futures markets at the moment, and now attempting maybe to try and break through this next level of resistance at 34,560. So looking pretty strong there. Let's look at the S&P 500, as that's the broadest index in the US, and we can see there that that's broken through resistance at 4325 from these previous highs back in August last year. Really nice move to the upside, showing no signs of slowing down. Big move higher yesterday as well. So that looks to be in recovery mode following a period in the doldrums and a period of decline or a bear market. Looks as though we're now exiting that, and the conditions for buying stocks have improved dramatically as a result. And finally, the shining star in the US markets at the moment, which is the NASDAQ 100. It's really powering on and has done for a number of months now. It is into resistance here. Couple of previous swing highs from back in April and February earlier this year. Sorry, in 2022 that was at 15,275. Above that, we've got a 78.6% fib level at 15,414. So I mentioned yesterday that maybe that would be a decent area to think about trimming some profits. If you've been running some of these tech names and benefited as a result of this huge move to the upside, at some point you need to start thinking about an exit strategy, because these gains don't mean anything unless they're sitting lodged in your account and netted off. So you might want to think about maybe trimming some exposure here, because the run high has been fantastic. Overall conditions are improving dramatically in the indices, but we don't often see markets move with such velocity to the upside. Nothing moves higher in a straight line. There will be pullbacks at some point. There will be other opportunities to get back in, but certainly trimming some off here as we approach the kind of real summer months where things can slow down a little bit. Taking off some profits here may not be a terrible idea. And well done if you've been doing that, as you've been owning stocks in the tech sector as well, because that's been a hell of a move. Okay, let's push it on then to the gun to the head challenge. So this is where we pick trade ideas live on the stream. It's with a real account as well. So we put £2,000 into a trading account at the start of 2023, running that with Awanda. So let me just log in there just so we can check that out. Couple of basic rules. So we must have risk reward ratios of 2 to 1 or better. So every £1 or dollar that we risk on a trade idea, we must look for at least 2 as a reward. And that is a non-negotiable for us. That is something that we always do when placing trades. These ideas are closed off at 9 p.m. UK time, unless the stops or the targets are reached in the meantime. It just means we don't have to carry any overnight risk. Obviously, we go through the events that are due out throughout the trading session. Some of these happen overnight if they're linked to certainly the Asia Pacific markets, and we don't really want to be involved in those because it's too much volatility, it's too much stress, and we want to be able to sleep soundly at night without any worry. Also, it means that we don't actually have to pay any overnight fees, because if you're trading using a CFD broker, you will be charged for holding your positions overnight, especially when you're using higher levels of leverage, because you're effectively borrowing money and there is a charge for that. So do be careful. That will be factored into your overall P&L. One of the other rules is that we will risk 1% of trading capital per trade. So we can see here on the Awanda account, our account balance is 1863. So nothing to hide here. Yes, we're down from where we first started, but we are just trying to showcase a few ideas on a daily basis. We're not spending too much thought or time or process in actually coming up with these ideas. We're just sticking to these kind of basic principles of looking for a 2 to 1 risk reward ratio, and placing stops and targets at levels we feel have got a chance of working. So today, based on the fact that I'm risking 1% per trade, my risk will be £18.63. So that'll be the maximum that I'll be losing or potentially able to lose on the day. And on the flip side of that, I'll be looking to make at least double that amount I'm risking for the trade that I take today. So I've got to try and find something now. And again, this really sort of showcases, what this is about. I have nothing prepared. I'm just literally going to flick through some markets now, have a look at some charts on the hourly basis that maybe look of interest, and see if there's anything I can potentially set up for a trade. So going to have a quick flick through some of these to see if there's any maybe topping formations or candles that I like the look of that would give me a nice setup for trading today. So looking through currencies first, nothing particularly interesting. Obviously, there's been some big moves to the upside, as we know. I don't particularly want to be fading into strong trends, preferably looking again for kind of topping patterns or things that are showing signs of weakness. Let's have a look at how this looks on the daily. Maybe a candidate there looking at sterling Swiss. Okay, that's going to do. I'm not going to give it too much thought or time. And I don't advise that you do the same. If you're going to trade, you want to be spending as much time and effort as possible in trying to highlight opportunities. So looking at sterling Swiss, we can see here price action is pretty range bound here on the daily chart. I've just drawn a fib level on from these highs that were posted in October last year down to these lows that were posted in March. And we've actually got a 78.6% fib level, which is at 114.51, which we've slammed into yesterday. And also we can draw some horizontal levels on here. We can see there's a number of wicks here that have acted as resistance for a significant period of time. If we look at yesterday's candle, we can see that's a pretty nasty reversal candle. So we've gone up, hit that 78.6% fib level and pretty much closed close to the open after a very strong move to the upside. So that indicates maybe a reversal is in play at the minute. Let's take a look at the intradays. And what I was immediately grabbed to here is that potentially we're in the process of forming a head and shoulders top. It's highly speculative and it is only potential at the moment because from what I can see here, we haven't actually completed that pattern yet. So I'm going with something along the lines of this, expecting that to play out. It's not a perfect one. They're not often they aren't. But if we look at the candle over the last hour as well, we can see it's engulfing the previous candle. I say over the last hour, it's only actually over the last 29 minutes. So in order for that to really excite me, I need to see that close in the same form as how it looks at the minute, but we've still got plenty of time left on this for things to change. But because I'm up against it time-wise, I like what I've seen on the daily chart. So that's given me enough of an idea about what I want to do. I'm going to sell sterling Swiss. I'm going to have a stop loss above this candle wick here actually. Obviously I could go above the right shoulder, but I want to just give myself a little bit of extra protection. So the high there is 114.26. So let's just drag that a bit higher, go at 114.28. Now, when you're looking at head and shoulders tops, to give you an idea of where price may go on the downside, what you can do is measure the distance from the head down to the neckline and project that lower. Now, obviously, I'm kind of a bit speculative here because I don't know effectively where the neckline will be, because if it takes a few hours for that to complete, that neckline is going to go higher and higher and higher. So what I prefer to do is actually go by the horizontal break of the neck. So taking out of this low here, and that would indicate where prices may go to on the downside. So it's basically a measurement of that head to the neckline projected lower, and that comes in at 113.03. So that's a 3.33 risk reward ratio. Maybe a bit unachievable today because I'm looking for 96 ticks on the downside there with a stop loss of 29 ticks. You never know. There isn't particularly much data out today that's going to sway things, but let's give it a go anyway. Now, I'm actually going to have to redraw this because I haven't got it on the Awanda chart, and it needs to be on that chart in order for me to place the trade. So let's go there. And I was looking for 113.03. So let's get the trade on, create a new order. I'm selling. I want to put my take profit and stop loss. So my take profit is at 113.03. My stop loss is at 114.29. My risk is 1%. So £18.63 is being risked. I've got my profits and stop loss levels in. I can click the sell button and the trade is on. So we are looking for lower prices there on sterling Swiss. Let's see how that plays out. Okay, data-wise today, just to wrap this thing up for the week. So we've got a Fed governor on a panel discussion at 12:45 UK time. That may or may not have impacts on the US dollar. It's been put down here as a high impact event, so we'll wait and see. At 3 o'clock, we've got the University of Michigan Consumer Confidence Index. So that could potentially be a market moving event as well. But obviously we're close to the end of the week now, so whether or not there'll be appetite to move these markets around wildly, we'll have to wait and see. It really depends on what the data comes out as. Next week, we've got UK inflation on the 21st. We've got the Swiss National Bank policy decision and the Bank of England policy decision on the 22nd. And then we've got global PMI data on the 23rd. So a few bits to look forward to next week. Okay, so as mentioned, I'm not here next week, traveling on business to Cyprus to go and visit some clients. Steve's away on holiday celebrating an anniversary. Hope you're having fun, Steve. So no streams next week. We'll be back the week after. Do be safe in the meantime and have a fantastic weekend. Thanks for watching, everyone. See you very soon. Goodbye.